What's up, Bat fam? Here we are with another video on gold. In this video, I'm going to show you guys how to find high probability trade setups. Now, this will basically just be some more information adding on from the last video, and the next video I will be making will be on the NASDAQ 100. In the Telegram, this is what everyone voted on, what they wanted the most. It was almost a tie, but there was one more vote for gold, so here we are doing another gold video. But next one will be on the NASDAQ. Now, let's get started.
Daydream. They've been sleeping on us. I'm just trying to see what they...
Alright, right now we are on TradingView. This is the Awanda XAU USD chart. Right now I'm full screen, but adding up from the last video, remember we mark our previous week's high, previous week's low, and I'm just going to dive into our first trade example here. And I'm going to show you guys how I found this high probability trade setup on Friday. Okay, so this is essentially the same exact process that I went over, but a little bit more. So, similarly to how we label our previous week's highs and lows, you have to know where your session highs and lows are throughout the day. Okay, this would be your daily low, your daily high, or the high during Asia session and the low during Asia session, and then the high of London session, the low of London session, so on and so forth. You have to know these things. And you have to know ahead of time certain areas that price could react from based on where the session highs and lows are, okay? So here we go. ASL, that I have this marked right here, is Asia session low. That's what it stands for, okay? Just nothing complicated at all, all right? Why is it that? Because this is the low of the day right here. This was Thursday into Friday. This was the low of the daily candle. Okay, it's important to know this. So you mark this off. This is the low for Asia session, because if you're not familiar with what sessions are in the Forex market and in trading, the market operates in sessions. So the first session is Asia session because the market opens the following day, and it is morning time in their country when it is, evening or nighttime here in America. The market opens and starts with Asia, and then it goes into London. It's obviously everything's based off times and time zones. Next is London session because Asia market closes. It's now evening time for them. It's London open, morning time for London and Europe. It's late night for US, midnight, 2 a.m., 3 a.m., that time. And then comes New York open, New York session, okay? So here we are, Asia session low. After that, Asia session high is right up here, okay? So that's the next thing you want to mark up. And if you're in the Telegram, you already know how we caught this trade, and a few others actually caught this as well. And I will show more examples than just this, but this one's really easy to show right now. Okay, let's go to the bar replay mode real quick and back it up. You can see how this trade already played out and hit the higher time frame area of resistance at 1805. Okay, but that's not necessarily relevant yet. We're figuring out how to spot this trade in real time. Okay. So given that the market just made a new high on the day, you could have taken sells on here, right? Because we had our Asia session low. We now know this is our Asia session high. How do we know this? Based off the wick rejections and how the candles look, okay? If the market was going to continue higher, it wouldn't look like this right now. So right now you know that it's in a pullback phase, or that it's going to come back down somewhere to retest a lower time frame level of support, or try to create a higher low somewhere, okay? So you mark these areas off. Price is already rejected. This is the Asia session high. This was at 9:30, 9 p.m. Pacific Standard Time, my time. Okay. Next thing you want to do after you see this, you need to read structure and what price is doing. Okay. So you understand you have your highs and lows marked off. You can see that price is bullish on this 30-minute time frame, and on the higher time frame, you already have a bullish bias based off of structure, and you can see that clearly here. So now you'd be expecting a higher low to be created somewhere. Okay, so here's what I do. Once you have that marked, there is another area that you need to mark off, which is lower time frame structure, which is right here. Okay, if you're not familiar with structure and breaks of structures, the market had to break this area of resistance where you could consider this a lower high. It had to break this area in order to continue higher. This was a lower time frame counter trend, and on the higher time frame you can't really see it, it's just a wick. Okay, it was a pullback. Okay, but this is a lower time frame break of structure that had a break for this bullish move to happen. Now, a lot of times after these breakouts, price comes back to retest and tries to come back to the previous session lows. Okay, since we made a high, the market needs to try and make a higher low. If the market's making higher highs and higher lows and going bullish, then the next thing you should expect is a higher low point unless structure's taken out or the daily low's taken out and structure itself starts to change and a new trend starts to form. Okay, you have to wait for all that to play out though. But as price is going down, you can get in on this counter trend, but you have to keep in mind of certain areas, which are these blue lines that I have marked out: the previous session low, Asia session low, and this lower time frame break of structure area. Okay, so you have these marked off. Now I'm on the entry time for the 30-minute, and you're following the current price action using this strategy, which we know is bearish right now, but we know that overall it's still bullish. So we have to be careful of these areas, as I just stated. So here we go. Next candle. Now you could have entered there right on that wick rejection. I had that there. Why? Well, because I also knew that's where price was because I was looking at this earlier. But there's a lower time frame break of structure here. Okay. Similarly to this line down here, this is the exact same thing except that it's bearish instead of bullish. Okay. Now this does not mean overall reversal because the higher time frame has to break structure and the structure point is down here based off the daily low point. Okay. This is just in the middle of the chart and wants to fake you out. When these structure points break, they're not as relevant as when the major structure points are taken out. So you shouldn't expect such a major move when lower time frame structure breaks. Okay, it's just meant for scalping and catching momentum trades, and that's really it. So we get in on that entry. There might be another pullback, but we should just continue down lower to this point. Okay, so there was a pullback, but you didn't get stopped out because you had the stop loss above the previous high. And if the market's going to continue lower down at these points, it's not going to come back up here and take this out, or it shouldn't. Sometimes there's sweeps, which sometimes will take out the low, then come back up, or take out the high, then go down. And in those situations, you either stay out of the market and wait until that happens, if that's your strategy, or you can simply re-enter the trade again at a better price and give it another shot. And typically it does work if your analysis is correct overall. Okay, so price is moving down. We just flip bearish and we're coming down all the way down to this point right here. Okay, so this is how you could have caught a nice sell move. I do have a family member that did catch some sells on here in the Telegram that was messaging me. After this move, you would have caught a nice 60 pips or so. Yeah, 60 pips on this. So you see this area already marked up ahead of time. If you missed the sell move, I missed the sell move, but I was waiting for the buys, and this is what I was waiting for. Not this move right here. I wanted price to come down right here because I knew that 1790, 1785 could possibly happen. So I knew 1785 was pretty extreme, but I was watching the Asia session lows and was thinking that we could see a sweep before the move goes up. Okay, so this is what I was waiting for. I had entered at 1789.8, and I'll have a screenshot pop up, and it's also on the Instagram as well. It's a reel made recently. So here is where I had my original stop loss, 1787.5. I had it there because if price is going to take out this area, then most likely it's going to come down to 1785. Okay, and why would I hold through all that drawdown, especially when I'm already wrong? Like, this is not the tightest stop loss, but the risk reward is very good, and it's only 20 pip stop loss. Actually, yeah, 20 pip stop loss. That's very safe. It's not the tightest, but it's very good. Okay, so I was waiting for this. Watch the next candle here. It came down. I'm going to drop down the lower time frame. Why did I enter right there? Okay, entered on this candle. I saw this rejection right here, and that's why I entered. And on this candle here, I had 8 pips of drawdown, and I wanted to enter again, but I already had 1% risking on this trade from that entry point. Okay, I'm sorry, I think I entered on this previous candle right here. But I had 8 pips, and I wanted to enter at the low, but didn't just because I already had my risk calculated, and I was going to add to my position when I had more confirmation. But I almost entered right at the lows and sniped that. However, we were just 8 pips off, and then I entered again, where I'm about to add this line, slightly above my entry price on this bullish candle once I had my confirmation. And had 2 lots running on here from down here, and then even added up here as well as price broke through. So understanding the highs and lows, understanding that this is rejection right here. It's a higher low point. If price wanted to continue lower, we would not reject near this area. And on top of that, I have this in the BAT playbook as well, but this is a low volume bearish candle. It didn't even break the lows. Okay, this is a sell trap. We go to the 15-minute, you can see it's a bearish candle. I wanted to induce the sellers in and make them think that we're going lower to make a new low point. But had you had this area marked off and understand higher time frame bias and understand the overall trend and market structure, this is a strong area for a potential higher low point. So that's why I entered. And if you go down to the lower time frame, the 3-minute, look at this. The bullish candle reacts from here, and these 2 bearish candles here were sell traps. They're trying to get the sellers in here. They're thinking, oh, we got a shooting star type of candle, wick rejections, yeah, we're going to continue lower. Then boom, next candle just smacked everyone and trapped all the sellers in. And then continued going up. You can recognize the candle behavior because it's a little slower than when it's breaking out. It moves very, very slowly, low volume, trying to entice you or induce you, in a sense, trick you to think that one thing's happening over another, when really, if you're looking at the higher time frame, you understood the market had a lot of potential to go higher. Okay, so now I closed at 1794 price range just because I was scaling in, and closed right here once I noticed rejections. And this is what I always say to the students and in my other content. You need to target the lower time frame support and resistance levels as your first take profits, and then for the overall higher take profits, you target the higher time frame point of interest. So here's the first one, then you would go to the previous high, which is the Asia session high as your next take profit, and then potentially this higher time frame level of resistance at 1805. And price ultimately went there, but look at the next candle. We hit the take profit, rejected, had a pullback. Now there's smart money concepts, which I'm sure a lot of you have already heard of, but this is a smart money concept trap right here. 1795 price range. A lot of traders are thinking this is a level of resistance where that blue dotted line is that I have, and taking sells. But we don't sell here. This is not a sell. This zone is not a sell right here, okay? Either you wait for the highs to get broken and a rejection, then you could take sells, or you go with the trend and take the buys up through this area. You do not sell here, okay? So we keep going, smash right through, and I believe we reject shortly after this. Next candle. But see, it blasts right through. A lot of people are selling right here simply because they're thinking, oh, 1795, that's a good area to sell. There's an area of supply if you see it that way, but it's not valid. And an area of resistance right here, this is a sell trap. You don't sell into this. We buy here. This is a good breakout trade. But ultimately, this is where I closed and caught this trade right here. But shortly after, I believe price pulls back. Yeah, rejection. We got to move up, hit the higher time frame level, and then came back down. And then ultimately push back up again, creating another higher low point. Okay, so let's go to another example. Sometimes you got to take what you get and not what you want. And sometimes you're going to leave a lot on the table, and sometimes you're going to be getting out at the right time. But ultimately, it comes down to the main point of trading, which is making money. At the end of the day, that's why we're all trading and what trading is about. Now, I actually took some sells here earlier in the week for a small gain, expecting a break of these lows over here. Okay, so we can see the trend was bearish over here, right? We're looking at this area here, right where this green ellipse is, okay? Looking at this price, these prices. I took sells in this area because, one, the market was looking bearish. We were looking like we were going to try and take out the previous week's lows. Or at that time, last week was the current week's lows. Looked like we were going to go make a new lower low point, but we didn't. All right, so let me walk you through some things. 1775 is an important price. 1775 needed a break in order for the trend to continue higher. And as you can see, it did. This area, there's a lot of consolidation, a lot of indecision until price finally broke above and broke through that point. Okay, so I was taking sells here. I believe I entered at 1773 and had a decent entry point, or 1774.1, something like that. The stop loss right at 1775. This was my first trade attempt on here, and I did lose the trade because I did trail my stop, but I also didn't trail it extremely tight. I could have went break even, but I didn't have that much movement in the first place. But I was targeting down here at 17, I believe it was like 1768. Yeah, 1768, 1769, which price never did hit that area. And that's why sometimes taking what you get is better than trying to hold for that take profit, overall take profit that you see, because sometimes it doesn't play out. But you had a decent move. So let's go to a lower time frame. You can see there's momentum here, but price did come back and take me out. As you can see, these bullish candles here. Okay, so price had moved when I had entered, went down for a nice 30 pips. I believe I had about a one lot on, and I did not close. It came back, took me out, and I had entered again at 1775. Okay, let's see what it was. Yeah, this was the candle right here. This was actually where I entered the trade. This rejection came down, came back up. I was assuming this was going to be a double top, but it got taken out here. And I re-entered again right at the rejection at 1775 on this bearish candle here. Okay, same exact trade, except the stop loss is right above 1775 at 1775.5. It was really tight stop loss, but I was assuming that was the top based off the resistance level here, as I was saying at 1775, and expecting a new lower low point. And I did close this time. We had a little more. However, at that moment, there was rejection, and I just closed instead and covered the previous loss and made a slight profit on the day. But as you can see, similar thing. 35 pips, had a total 35 pips, close for, I believe it was 20 pips. Yeah, close for 20 pips to cover this loss and had a slight gain on the day. But had I closed down here, we had a much bigger gain. I believe it was over 1%, even with the loss covered. However, at the end of the day, you can only manage the trade and take what you get, not what you want. And at the end of the day, it comes down to making money. And that goal was accomplished. And had I held, we got taken out again. And not only that, been on the wrong side. So it comes down to adapting to price. Now, if you go to the higher time frames, at this moment in time, it didn't look how it does with this wick rejection here. Yeah, there's a bullish candle, and it did look like their price could go up, but right here is rejecting this very important price range. Now, when I was entering for the sells, there was no buy confirmation yet. But after that, after the second sell on that rejection, that was the buy confirmation for that trade. So it was wise of me to get out. But at this moment in time, price was attempting to go down, but it ultimately failed and price pushed bullish. As you can see, that's why there was a lot of indecision on the higher time frame here. As you can see on the 2-hour, lots of indecision for 1, 2, 3, for 10 hours. indecision for 10 hours in this area. Okay. So we can only adapt to what price is doing and what we see on the charts. But at the end of the day, this trade didn't play out how the previous buy did. This was a really high probability trade. In my mind, this was a high probability trade too, but all we could do is adapt to what we see. And at the end of the day, still made money, and that's what's important. But these are based off the similar concepts. This is the Asia session low. This was the Asia session high. And I was assuming price is trying to make a new low point. You can see lower lows, lower highs. You have to go with the flow to trade market structure, but you also have to manage your trades efficiently. And you also have to take good opportunities when you see them. You know, price moved for 30 pips, 35 pips on each trade. That's a good trade. You know, on 5 lots, it's $1,500. On a 2 lot, that's $600. You know, that's a good gain. It just comes down to trade management and how you're trading, your trading style, and your ability to read price action and adapt. But I hope you guys enjoyed this one. I hope this helps a little bit. Stay tuned for the next video on the NASDAQ. Don't forget to join Bat Signal's free Telegram. Follow the Instagram, follow the TikTok, and like this video. Don't forget to subscribe, and I'll see you guys in the next one. Peace.